Today, you're going to hear 3 signs that if you have them, congrats, it's very likely that you're above average financially. But in this video, I'll also be adding a balancing point of view because there are 1,000 ways to get rich and there are 1,000 ways to stay rich. The most important part is if you are above average financially and you don't have other aspects in life that completes happiness, which includes health and relationships, it is all for nothing. And if you agree on that message, smash the like button early and let's get rolling. Hi guys, welcome back. Without further ado, let's get started. Sign number 1. You have a private property that is fully paid. Let me explain again because today's topic is signs that you're above average financially. 23% of population stay in private residences, and that's why if you own a private property fully paid, it is a definite sign that you're above average financially. That is something that you already intuitively can guess, but there's some data that I'd like to show you to expand the topic a bit further. Take a look at this graph over here. It shows that since 2012, the share of population living in HDBs have been declining for the last 10 years. Previously at 83%, right now at 77%. I guess that is a result of private properties showing a lot more appreciation in recent 10 years and the mass population of Singapore extrapolating that outperformance into the future, which may not necessarily play out that way. That is a reason also why many young couples are looking to buy a condo as a first property and taking on severe mortgage stress. Having a fully paid house, on the other hand, means you have no mortgage stress, and if you're not familiar with the current mortgage landscape, let me show you some numbers to drill that pain really in. Taking a $1 million loan at 4.9% floating rate right now in today's market means that the individual or family will need to shoulder $5,788 per month in terms of mortgage cost. This again is if it's for 25 years. If the couple is older or if the individual is older, past the age of 40, the loan tenure may shrink. That means an even higher per month mortgage cost. That is also why OCBC's Wellness Survey has found that 2 in 5 Singaporeans are facing mortgage stress. Take note again, this Wellness Survey is 2022, where interest rates only started to climb for a few quarters. Today's rate is even higher than back then. That's why I'd like to guess that more than 2 in 5 are now facing severe mortgage stress, and there are a lot of families who are on fixed packages from previous years that are coming off the books and they would enter the market looking to fix right now at rates that are much higher than before. Pivoting the story a little bit, I don't know if you've seen this article before, which states that some bungalow owners are house rich but cash poor. In this controversial article, it's also mentioned that an elderly woman and her daughter were so out of cash that they had to depend on their friends to pay for their meals wherever they had group gatherings. And long story short, they got discovered and people got very annoyed. This article also drew a lot of criticism from netizens, and it's also very easy to understand why. Because quite simply, if you don't have cash, you can sell that property, correct? Downgrade, what's the difficulty? Maybe there are, but for most people looking from the outside, it's very difficult to sympathize. That's why I'd much rather be in a position that is staying in, for example, a 5-room HDB flat that is fully paid and have a ton of cash that I can consume. Or even better, have a ton of assets that produce me cash flow. I don't want to stay in a big bungalow and miss out on USAVE vouchers, GST vouchers, cheap property taxes, because right now we do realize that government is raising property taxes for those with annual value more than 30,000, whereby most landed properties will get caught in that space. Moving forward, it's very likely that government will also target for more taxes, and I definitely don't want to get caught in that space. Staying in a big 5-room HDB as an elderly, I think is a pretty good idea, because when I think through a case, I realize that if, for example, the HDB flat's lift is spoiled, very simple, call the town council, they'll get it fixed for you, FOC. Right now, my lift, if it spoils, we need to raise money, and that's what we've been doing, to do a lift replacement which costs hundreds of thousands of dollars. I'd rather put my money to the next thing, which is sign number 2. You have passive income from investments that are worth more than $1,000 per month already. Dividend income is the real passive income that is in the market. If you own properties, that's different. You need to manage agents, you need to manage tenants. There can be gaps whereby there's no rental income. And speaking of why this sign of more than $1,000 per month passive income as a sign that you're above average financially is because I've done a poll on my Telegram group. If you're keen, look for links below on how to join JOSH TAN official investment channel. You would realize that if we box up those that are in the dividend investing space, of course some prefer growth investing only, we will realize that minority have more than $1,000 per month right now in dividend income. That only equates to $12,000 per year, and from an investment pool of $300,000, that can easily be achieved with a 4% dividend yield. That means also many people have more money tied in their properties and CPF than an investment portfolio, and that's why I'd like to advocate for more dividend investing. This leads me to introduce to you today our proud sponsor, Moomoo SG, who has an offer for us right now. If you're new to Moomoo's platform, there are a few things that might interest you. The first is that right now they have a $0 brokerage charge for Singapore stocks. That is one of the most competitive offers in the market, and that saves you on trading charges. Not just that, for new signups, you can earn for yourself up to $700 worth of welcome rewards. This is achieved by depositing $10,000 and performing 5 buy trades, and they'll earn you 1 free Apple share, 1 free Limited share, and you can also tap on Moomoo Cash Plus 5.8% guaranteed. All in all, I think this is a fantastic offer for you to try the platform. And let me show you a quick interface within my own account. You would realize that I collected dividends, and that was automatically invested into the Fullerton Cash Fund, which I've opted in to get returns from idling cash. And let me do a quick demonstration. Go under Assets, or Functions, Fund Details, and you can actually see your dividend collected together with the service to help you auto-invest that into a cash fund to get extra returns. So as always, if you're keen, look for links below and check out Moomoo's Rediscover Singapore campaign right now. A balancing point to this sign of having more than 1,000 in terms of dividend income is to understand that real estate could potentially provide income also through property rent. I understand that some of you guys have better affinity with real estate, you have made monies there, and it's also a proven way to compound your wealth for the long term. Again, the main message is have enough assets that produce you income sources to help you fund your retirement. And speaking about retirement, that leads to sign number 3, which is you have more than the enhanced retirement sum in your CPF already. What is the enhanced retirement sum if you're not familiar? That is actually 1.5 times the full retirement sum. And full retirement sum is just a figure. If you have surpluses above that amount, you are free to withdraw that amount past your age of 55. And enhanced retirement sum is a limit whereby you can voluntarily contribute to your CPF retirement account. Right now, if you see in terms of monthly payouts, under the standard plan, enhanced retirement sum will give you $2,280 already. This number will be adjusted upwards, which means if you have the enhanced retirement sum itself, in cohorts moving forward, you will easily enjoy $2,300 per month in terms of passive income coming up from CPF Life. Is $2,300 a lot of money? Maybe let's bring on a different perspective. 33% of all active CPF members who turned 55 in year 2021 did not even meet CPF's basic retirement sum. So don't assume everybody has a lot of money in CPF. It may not be true. If you have enhanced retirement sum, it's really definitely a sign that you are above average financially. But let's aim a bit higher. These are numbers published by CPF for regross balances for all members. What I would like to highlight is the cohort that has more than $500,000 earned as regross balances. Regross balances again is monies from employment, from contribution and interest, and it does not factor in monies used from CPF OA, for example, that has been used for mortgage. Again, it does not mean that that is the residual amount in the CPF itself, because it's quite clear that most Singaporeans have actually used their monies from CPF OA for housing needs. What I'd like to share with you in terms of observation is that the number of people who have more than 5,000 in regross balances has increased by 50,000 from 2021 to 2022. And as we know, government has raised the CPF monthly salary ceiling, which means anybody earning more than $6,000 can get more contributions to your CPF. I do believe that this more than 500,000 number will easily go by more than 10% per year moving forward. We should have a next tier which is more than 750,000 coming up in the next few years ahead. But to reinforce, that's not the balance in the CPF. I guess many people who have regross balances more than 500,000 will easily have full retirement sum inside their special account already. And that's what I'd like to drill in. Because the concept is this. Once you hit full retirement sum in your special account, you're going to remain above there until the age of 55 at least. CPF SA compounds at 4%, whereas your full retirement sum compounds at 3.5%. And I have a further point to add. I went to dig on past CPF regross balances, and I realized that back in 2021, they actually broke down in terms of age group and balances. What I would like to draw is, if you're in the age of 30s, and the regross balances are more than 300,000 already, I guess that's not too bad also, because you will reach there in due time with all the compounding and continued employment, and you definitely get into a space of 500,000 and above, which is today my third sign that you're above average financially. And what can be a balancing point of view? For myself, actually, I don't have that much in CPF. I'm a self-employed person. I actually contribute more to SRS for my own retirement, as I believe that gives me tax relief and that also has certain flexibility in terms of investments. That is why, if you haven't seen this previous video, I don't have that much in my CPF. Check it out, it'll explain reasons a bit better. Or if you have seen that already, check this video out, why I believe I'll get to $1 million in my SRS account. If you haven't seen either of these two tutorials, check them out because it can give you deeper insight into retirement planning concepts in Singapore. And as always, if you haven't smashed the like button, do so. And I'll see you in the next video. Take care as always. Goodbye.